For the next panel, if you panelists and moderator want to come up talking about the enabling the future of commerce. Yeah, I'll let you take it from here.
Good afternoon, everyone. My name is Michelle Bayo. I'm the CEO and founder of Finnovator, which is a payments and open banking consultancy. I'm really excited to be here this afternoon. It is my third time at MPC, but the last two times were virtual, so really nice to be back in Atlanta. And I wanted to start today's with a question from the audience. How many people here have traveled to Australia and used their payment system at any point in time in their lives? Okay, great. The reason I mention this is because our panel is largely going to talk about enabling the future of finance. And I had the pleasure of living in Australia for a year in 2002, and their payment infrastructure was quite archaic. But in the last 2.5 years, they have become one of the world leaders by moving towards open data, open finance, open telco, and open banking. And we have covered quite a bit in this morning's sessions from US Bank and many other panels, and really wanted to take the opportunity with these two incredible panelists to talk a little bit about what's shaping, what trends are driving the future of finance. And as you look at the global market and you're watching markets like Brazil and Australia, New Zealand, the UK, Europe, and many other markets moving towards the future of finance in many different ways. In the US, North American market, even with Canada, Mexico, we're looking at many trends all happening at the same time. And I think when we see COVID has really altered the path of digitization. So I'm really excited for today's panel discussion because it's truly important for North America to keep pace with what's happening on a global trend, and really having two expert panelists with me to help through this discussion. So first I have Ginger, and Ginger Schmalter is the principal for data and services at MasterCard, as well as I have Doug Woolridge, who's the VP of Financial Services for North America for EPAM. And to get us started, I'd love for each of them to share a little bit about their current role, as well as any countries that they've lived in or have worked with over their career. So first, I'll pass it over to you, Ginger.
All right. Ginger Schmelzer. It's a hard one. I am currently at MasterCard. I work in our data and services group. I'm a principal there. I'm pretty new to MasterCard. I've been there about 4 months. But I've been in banking and payments for 22 years. I was a banker at Truist when it was SunTrust. I served some time at Fiserv. One of my former colleagues is out there in the audience. We were commiserating about our Fiserv time. I've also been a consultant, and most recently was at IT Group as a research analyst for a couple of years. I have lived in 5 different countries, although none of them in an actual work capacity or as a student or just on sabbatical. But I have worked with probably 12 or 15 countries around the world in a payments capacity. And it's wonderful to see what's happening outside of the US and kind of sad to see how far behind we are still in many ways.
I'm Doug Woolridge. I co-lead the North American Financial Services practice. For those who don't know, EPAM, S&P 500 company, about 60,000 employees worldwide, operating in about 50 countries, and a global payments practice. I've lived in about 6 countries, I think, and Michelle challenged me. I think currently I'm working in about 10 countries from a financial services or payments, primarily in Europe, North America, and a little bit in Asia Pac.
Yeah, thank you both. I think we've had so much insight on the US market this morning that I really wanted to make sure we covered the global insight because there's so much happening and credit unions and smaller banks, even big banks. There's just so much on the agenda of what's happening in today's market. And we're looking at consumers having, at this new World Bank report in June stating that 2/3 of all adults worldwide have either received or made a payment digitally. Therefore, the digitization roadmap for the banks is massively accelerating, and they have to decide what to be focused on and how to ensure that they're driving their consumer path forward. So it's a really hard thing to facilitate. Can you share maybe, Ginger, a little bit about how MasterCard is helping financial services institutions find their path on what to focus on and prioritize?
Yeah, I can talk a little bit about MasterCard, and then I can talk more broadly about some research we did at ITE. MasterCard works across, we've got fintech partnerships in 172 countries. We've got a developer portal. We've got our MasterCard Engage. So we're helping fintechs develop to serve our issuers and acquirers, and we are helping our customers helping our bank customers find partners. So we're kind of working all angles of that. I think at the end of the day, I think this year there's been several conferences, including this one, that have changed their name from either card or traditional payments to digital, right? Because we all know kind of it's no longer just about the card. It is about making payments in whatever way consumers and merchants want to do that. And I think MasterCard's no exception to realizing that plastic is less and less the primary form factor. It's much more about being able to make a payment when and where you want to. And so we are working in many different areas to make that happen. You had a question coming later, I think, around payments modernization, right? So I'll hold my other comment for that, I think, if that works.
Yeah, fair, Doug.
I think we at EPAM have a unique experience in that we were at the forefront of payment modernization in Europe and in Asia Pac, and bringing a lot of that knowledge into the North American market, which is dated in terms of how much progress there. In other markets, the concept of checks and cash has basically disappeared for the majority of citizens. And that puts a unique knowledge that we in North America, Canada, and the US are in, because although we might be a little later, we can actually utilize best practices as a result of it from what other countries have learned. There's about 66 countries who have implemented a lot of this, and we're a little behind that in North America, both Canada and the US, and that's where the opportunity lies. And so when you look at the tier 2, tier 3 market, tier 4 market, and credit unions in the US particularly, and to a certain extent in Canada, you have a lot of organizations that are in a bit of an existential state in order of trying to understand how they're going to be able to deliver against next generation capability, next generation expectations for customers, and yet at the same time maintain a healthy profit margin as a business. And the trade-off between those two is what EPAM is spending an awful lot of time working with those organizations to help them achieve their goals.
Yeah, thank you. And then when we think about that, like there's 20022, there's real-time rail, there's open banking, there's so many different initiatives. So looking at all of that infrastructure, realizing that you have budget constraints as well as you have access to IT staff constraints, how do you foresee banks being able to take, what is that priority they need to be putting in place right now based on kind of the multi-moving opportunities?
It's not an easy question, right?
Yeah.
It varies so much based on the size of the bank, the location, their kind of their product set, et cetera. But the survey I mentioned we did at ITE last year, we talked to 21 retail banks around the world and asked them about their payment modernization priorities. And it was a really interesting set of learnings, because their top priorities were things like cloud and payments hub, but the top two were APIs, API integration, and AI and machine learning, and for very good reason, right? These are key technologies that are letting them work with innovators in the space, bring things quickly to market for their customers, improve customer experience, and on an ongoing basis kind of refine that. But what I thought was even more interesting was it wasn't so much about which technologies you choose or where you prioritize putting your money as far as that goes. So much of it was really systemic. You had to really make the changes internally at your own organization, right? right? So not just finding who to partner with, but how do you partner with them? How do you revise your sourcing approach to make sure that you can actually partner appropriately with a startup or a smaller company or a technology-based company? How do you manage your IT organization so that you can be working dynamically with partners to bring things in? How do you manage risk so that your risk compliance folks aren't shutting everything down because of outdated risk management priorities? How do you manage operations to be able to service these third parties who are bringing things into your organizations? So it's much broader than just the capabilities themselves. It really is about enabling that within the organization and bringing that to your customers effectively and efficiently.
Yeah, I think one of the key points there is doing nothing is not an option for a bank. And so your first goal, as we talked about, and I think, Ginger, you're right on, is what is the business outcome that you want to achieve? What's the customer segment that you want to enable? If it's not the one you currently have, how are you looking to achieve reaching out to a new customer base? Technology is at best 20% of the overall solution. What is your new target operating model? What is your new customer experience? How wide a reach are you going to take? Do you determine that you're going to be a national provider of digital services, even though right now you're a super regional around 4 or 5 different states? How do you leverage or continue to leverage your branch model? How do you continue to get value out of the ATM network that you're part of when you have a next generation who needs banking, but they don't really want to bank? And recognizing that what they're looking to do is actually curate their own financial services package on their phone. And that's likely going to mean 4 or 5 different organizations. And quite frankly, although as an overall demographic in North America, we still might use paper, they don't. They don't know the concept of a check, the concept of physical fiat currency is no longer factors for them. So they're expecting a 7/24 ability to move money efficiently, effectively, securely. And if there was a fun element actually in it on top of that, they'd be interested in that too.
And also immediately.
Yeah.
Like they don't want to wait for settlement, wait for the money to come through.
They have no interest. And instant payments, which we talk about a lot, is one that requires an investment. It requires investment rails. It requires an investment in an ISO 20022 standard. It requires decisions on implementing an open API platform. Should I invest in a new core platform that has incremental capability in order to meet some of these needs? So before you get to all of those questions, you have to ask, who am I as a bank, and who am I servicing, and how am I going to make a difference to them?
I think there's also, sorry, I know we're going off the rails here.
No, please go ahead.
I think there's also, I think it's a great question about who are we and who do we want to be. I think a big challenge a lot of banks have faced over the years, and certainly when I was a banker, we were battling this as well, was the battle of owning the customer and which brand is front and center for the customer. And I think a lot of the evolution has really been about letting go of not just owning the customer, but owning the whole experience, allowing part of that experience to be passed off to a third-party provider, to a partner, to someone who's co-created with you. I think it's really been an important evolution because you have to, at some point you realize the technology is too complex. The evolution is happening too rapidly. The regulations are changing too quickly. And then you have to rely on partnerships in order to be effectively servicing your customers and being profitable in your own business.
Yeah, and I think just to add to that point, it really leads into the next question of there's 10,000 banks, or 10,000 fintechs living within the US. There's multiple fintechs around the world. You're a bank in the US or in Canada. How do you choose who to partner with to ensure that you're not spending your time and your resources on a very niche play that might not get the customer adoption that you're looking for? So how maybe I'll start with Doug on that one.
Well, you have to partner with the right person who understands the partners. To be honest with you, if you look in North America, there are about 16,000 active fintechs in the North American market today. 10 in the U.S., 6 in Canada. So if you have the ability, if you're a tier 1 bank, you maybe have the ability of putting a team together to assess your needs, your customers' needs, and what you want to do. If you're not in that position, then you have to rely on the expertise. We provide that type of expertise to help you basically pick the right partners relative to what you're trying to accomplish. But in many respects, that goes back to what is it you're trying to accomplish and when you want to accomplish it and about how much money you have to spend. Now, if you're in a tier 2, 3 world, you can't go to the dealership with Cadillac aspirations on a Chevy budget. And so you have to recognize that in order to accomplish what you're going to need is likely going to require compromise. And because of that, you have to start with a roadmap. You have to understand where you're trying to get to and how you're trying to get there. And within those constraints, there's lots that you can do. As a tier 2, tier 3 bank in a super regional community bank, there's lots that you can do to elevate your position in the market from where it is today. But it does require a measure twice, cut once sort of approach.
So true. At MasterCard, I work with the community institution segment, so I work with smaller banks. And they absolutely have to work through their processors, through MasterCard, through other partners to really vet who they're going to work with. And at the end of the day, 16,000 fintechs, they're not all going to win, right? I mean, you're going to make a bet. It's going to fail a lot of times. But I think that the smaller banks particularly rely on partners like us to help them vet that and help them find the right partnerships and or be able to pivot to a new one if one goes out of business or gets acquired or whatever might happen. But a lot of what I've done in my consulting background and even now at MasterCard is advising the financial institutions on how to prioritize, as you said, how to think through what do you want to be to your customers, what do you want to focus on, what is your region or your county or your city or wherever you're focused, what matters mostly there, and what's the reputation you want to build to your customers, and how do we help you get there, and that is really it. You can't be all things to all people, so decide if you want to focus on financial wellness, if you want to focus on a breadth of payment capabilities, and what it is you want to do, and then we can help advise you to get there. But you can't do the same things as the tier ones. There's just no way. I mean, Chase has a bigger technology budget than most of my bank customers have assets, right? It's just it's not a level playing field.
So where you spend your money early on is enabling yourself to be successful, right? You have to enable that with an API strategy, an API technical strategy. And if you're a tier 2, tier 3, that may be a foreign concept. So working first to understand that, because API in layman's terms is plug and play. It's a plugging in other person's capability. And then you're going to have a discussion with yourself, well, actually, that means they own the customer relationship and not me. And the answer is that doesn't mean you became wholesale. You are still a retail bank. Your relationship is going to change, and you have to evolve with that in order to enable that. And don't shy away from that. The fear of that, the alternate choice is not acceptable. So you are going to have to find that compromise where you're going to share the customer relationship when you achieve these new products and services offered to them.
At the end of the day, the customer relationship, nobody owns the customer.
No.
The customer owns the customer. The customer decides how they want to pay, how they want to manage their money, and if their bank or their payment partner is not going to support the way they want to do it, they'll find someone else, right? And so I think it's really incumbent on financial providers to find all the different ways to let Ginger make a payment, right?
Yep.
If I want to make it a certain way, then I expect my financial institution to support that. And that's, I think, the biggest challenge is trying to be more flexible to meet the evolving needs of customers. And we all know that payments is additive, right? It gets more complex every year. There's more payment capabilities, there's more providers, there's more interfaces, and it's not an easy problem to solve for the financial institutions.
Yeah, and I think that brings us into the real big question here is as we're looking towards that consumer being in charge and giving consumers the power. Similar to when you look back to telco days, I spent 6 years in telco, and I know a lot of people actually in telco moved to payments. And back in the day, you could not leave your telco with your number. You were stuck to that telco, and you were stuck on a 3-year contract. But then Open Telco came about, or at least to the point of number portability, to allow you to move to another telco and take your identity with you, which was your phone number. And in this same concept, you're seeing, like I mentioned at the beginning of this, that Australia has moved, after the UK moved to open banking in 2017, Australia moved in 2020 to be open data, followed by Brazil in 2021 in the midst of a pandemic to be moving towards open banking and now moving towards open finance. So looking at the core need of what open banking is giving the consumer the right, similar to telco, to move their data as they switch banks or as they add an extra bank to their portfolio, as Doug was mentioning, having multiple services to get what they're looking for in their lives. This trend has been regulated in the UK, Australia, Brazil, New Zealand, and so on. But yet in Canada, in the US, it's more of a market-led approach. So a little bit different. There's no regulation to point to as we move towards giving consumer this movement to their having access to their data. And I know MasterCard's working with, I think, 63 countries on open banking. So maybe you can shed some light to that global insight, Ginger, and then we can ask Doug a little bit more on EPAM.
Yeah, I can't shed any light on exactly what MasterCard is doing, unfortunately, but I do, yeah, I think it is not if open banking happens in the U.S., it's when, right? I mean, it is coming. The CFPB is doing work on it. Like, it is happening. At the end of the day, it's because consumers need to have control of their data and the ability to move. It has long been kind of held knowledge in the financial institution industry that it's friction that keeps people at banks, right? It's hard to move. It's hard to take my bill payments and all my things that I've set up and all the history I have at the bank someplace else if I want to move. And banks have kind of enhanced that friction. Open banking takes that away. It makes it easy for me to move around. And so then banks are forced to compete on their service and on their product set and on their customer kind of experience. And that, I think, is a very interesting challenge. And I think that's where kind of we in the industry need to be helping banks get there. It is not so much how we get to open banking, it is how we compete once we're there that I think is the challenge.
Well, open banking is a euphemism for consent, right?
Yeah.
And that a consumer has the right, not a privilege, but the right to their information and the right to who gets to see it and when and why, and to take it away from them. And that is that's the future. So that means the elimination of screen scraping as a mechanism of without their knowledge, providing their password and name and password so someone can go into their financial information and check out in order to meet their particular need. It also means that you should have the ability of only delivering that finite piece of information that solves your particular need of that day. If it's just this one piece of information, that's all I want to give you. You don't get to see everything else, just that. And afterwards, I can turn it off. So the future of that is to recognizing that the bank is a custodian of information now. And that's the big change. And as we move to true open banking, the flexibility that it creates for consumers is endless. I mean, can you imagine being in a position of applying for an insurance policy? And in that insurance policy, immediately someone can, with a single stroke, you're saying, I'm Doug and I'm good for it. That's it. That's the only two things, right? But the other thing is, I'm Doug and I have the money to pay for it. These are the two things. Most of the other things are really nobody else's business. And open banking and the ability to do that is very intrinsically tied to payments, because it's the movement of money that is the result of me determining that it's definitely Doug, and I definitely have it in order to move that. And all those activities couldn't come instantaneously. One of the activities that a lot of us have experienced is going for a mortgage. The whole process of finding a house, getting approved for the mortgage, buying the house, moving the money to the lawyers and the agencies, we at EPAM proved that was a minute and a half with proper open banking, and we were working with MasterCard in that regard. So we proved that, by the way, from your pajamas in your bedroom. In a minute and a half, you were able to find the house, make an offer, have the mortgage, make an offer, complete the transaction. And so that's the future of open banking and payments, the marriage of those two, just that simple use case that most of us, understand.
Yeah, and I think when you see the pace of technology, right, and so many things happening at once, and you're looking at this North American market, and I think Canada and the US, we do work well together in the sense that EMV did come to Canada first in 2015 and then on to the US. Open banking is starting to have realms in Canada as a market-led with a government touch. I would call it kind of a hybrid. And with Biden's executive order last July in the US, giving that data portability concept, because that's the core part of open banking, is obviously having clean data portability through APIs. And MasterCard, you guys acquired Finicity. So maybe you can talk a little bit just about that purpose. I think that's a large aspect of the growth you guys are having with North America.
Yeah, for sure. I mean, I think, again, like I said earlier, MasterCard acknowledges that, cards are not always going to be the primary method of payment. And so we really are having to look more broadly into how payments are evolving and how our consumers and our merchants want to be paying. And so that is, Finicity really is that it's driving kind of how do we bring open banking into the mainstream of payments. And I think there's a huge aspect of education around open banking for the players in the payments ecosystem, right? Because I think we've trained the industry, not just MasterCard, but I think generally all of us have been trained to use cards and to be kind of comfortable with the protections and the rules around card usage and dispute management around that and chargebacks. And consumers don't necessarily understand how that's different when you go to things like an account-to-account payments or moving things more dynamically at an account level as opposed to a card level. And I think that's a big hurdle to get over. I mean, you only have to look in, recent articles about all the fraud through Zelle, for instance, and consumers don't understand why they're not getting their money back. And it really is just, it's an education about the payments are beneficial in certain levels, and there are challenges to them on others, right? So merchants get paid faster, they pay lower fees, consumers can pay more securely, or can pay more rapidly and can pay directly out of their accounts, but they may have fewer fallback options if things go wrong. So I think there's a lot of those that we're having to navigate as we move into the kind of the wild future of open banking here.
And I think, bringing it back to, the banks and financial institutions, I mean, you've got pressure from non-banks wanting to introduce financial services, right? Retailers, grocery store chains, do-it-yourselves are all going to say, while you're shopping here, you can have your savings account and your deposit and your other services. So that introduces. So although it's rapid and a lot of change, that doesn't mean it's a no-win situation. But you are going to have to change your operating model. You are going to have to change your strategy. You are going to recognize that your next generation of consumers don't want the traditional approach. And if you're open-minded and willing to think and adapt, then organizations like MasterCard and EPAM are here to help. And we recognize that's not an easy thing to do. And we recognize that it's not an inexpensive thing to do. But it is still, you have to do something, because otherwise, the pace of change is simply going to outpace your ability to service your customers.
Yeah, and I think there's been so much shared throughout this day, especially within this panel, kind of looking at that global lens, and we definitely want to get your thoughts and your questions so that we can help answer anything in regards to, how the market is moving, what's happening globally, and leave it to the audience if you guys have any questions that we can answer for you before we come to a close. So everybody's prepared for open banking, and you guys have full strategies ready to help your consumers. I think the one thing that I realize when we look at the open banking aspects, like in Canada right now, we've just proposed, because it's market-led, hence that means we're the market. All of us in this room is the market. We don't have this heavy regulation being handed down stating, this is the date it will go live, and this is what the consumer is going to get and what all banks have to facilitate. Meaning, if we come together as a market and we truly understand what open banking can be a win-win-win, not just for the consumer or the fintech, but for the bank, because it helps you modernize and push yourself to this API-driven relationship set and get away from screen scraping, which I know your legal teams do not love. And it gives consumer the power to understand what's going where and when without them having to be, when we say that they get the right to move the data, it's not that they hold it themselves. They're just giving you consent to move it to the third party. So I think that it's a market-led approach needs a market discussion. Yep. And I think it takes a lot of discussions like this and you getting involved in any groups that are talking about open banking so that your voice could be heard, so your questions could be answered, because it's going to be led by you. And therefore, if you don't throw your hand up, it could have a stronger voice versus a community voice. And I think that could be the challenge in North America, because I'm watching New Zealand follow Australia in a very methodical way towards open data, and they are giving their consumers the power. Their banks are at the table, and they all have a run date, and all of the smaller banks know exactly what they're going to get because they're all at the table together with the government. Us now doing it, this market-led approach means, what does that mean long term? Is it going to take us longer? Are we going to have some broken aspects of it unless we all come together? So maybe our final thought is, both Ginger and Doug, how do you foresee, as a market-led North American approach, we're the only markets going market-led on a global scale, how do you foresee us doing it in the right way to get there for everyone to have a win-win-win?
Well, it's a challenge, because then the largest institution wins. They have the ability of influencing for the smaller. So innovation will always beat, too much power in the hands of the large institutions. So innovation is what's changing that. You can compete with an innovative approach, and you have to make sure your voice is heard. Because in a market-led, in both markets, you have 5 or 6 banks that are effectively in each market who are, driving the discussion, because, well, they can afford to from that standpoint. So your best bet is to look to innovation, to create a market for yourselves, and then voice your opinions on how it should be played out.
It's interesting. I don't know that my crystal ball has never been very clear, unfortunately, in all the years I've been in payments. And so I think that I am always surprised how things turn out, even when we feel like we kind of understand directionally how it's going to go. Some player comes along and comes up with an idea or an angle or an innovation that I think changes the way things are done. And so I don't have a good answer for that. I think it will be interesting to watch what we take from the other markets that are more regulatory-led and what we bring to it from a market kind of perspective. At the end of the day, it's going to happen. Like we're going to have open banking. We're going to have the ability to move the data. It happened in telco, to your point, and now we can't imagine not having that ability, right? And so it will happen, and consumers are demanding it. I think that the real challenge is going to be to see how many of the legacy institutions survive that change and manage to remain competitive.
Yeah, well, thank you so much for your time and joining me today. It's been an absolute pleasure.